Hello, and thank you for joining us for the August property market update. Needs to remember what month we were on there. Today I'm here with my colleague Robert, and we've got some very interesting stats. There's quite a lot going on in the market. So, Rob, tell us how are house prices faring over the last sort of 4 to 6 weeks?
Yeah, so average asking prices for properties have risen again in Oxfordshire. Again, like previous months, we're not seeing huge growth month on month, so it's 0.2% has been the growth.
That's reasonable,
so reasonable growth. It shows that there's again still positive market sentiment out there, and we've discussed that previously. That as long as we've got a little bit of positive market sentiment, as long as we've got decent availability of finances, the market is going to continue to grow. So that's quite encouraging.
And annually, it's 1.7.
Yeah.
So that's another interesting statistic, because I appreciate when we had Liz Truss came in, and we had the perfect storm of Liz Truss uncertainty, hyperinflation, interest rates going up at the rate of knots. There was, from the end of 22 and most of 23, the market was pretty sluggish. Only those that absolutely needed to buy were transacting. Whereas now we're seeing all of the people that put off their activity in 23, in the end of 22, who they were the want to buys, not the need to buys. They were deferring their decision. They're now taking action. So we're seeing that energy in the market. So talk to us about talking about that. New seller activity, Robert.
So what's quite positive is that there are significantly more people new sellers coming to the market, certainly than they were last year. Obviously, we discussed last year was not a great year, as I said, the perfect storm. But we've seen a 12% increase in new sellers coming to the market compared to this time last year, and that is then driving sales up as well. So sales have come up 13% year on year. So that again just shows that positive market sentimentality that's out there at the moment.
And it's a reassuring balance that if and this is not just AR Property Partners, this is the Oxfordshire market as a whole, and the data here comes from Rightmove, so majority of agents are going to be on that property portal, so there may be the odd anomaly there, but what's reassuring is you get issues with house prices when there's more stock and no buyers. At the moment, if there's a 12% increase in properties coming to the market and a 13% increase in sales being agreed, then that's actually a positive indicator for house prices going forward, because the supply and demand balance is actually demand is outstripping supply, and that's going to push prices. So
one thing, again, another field that seems to have increased quite a lot is the top of the ladder sector, the sort of the higher value family homes, sort of the 4 beds, the 5 beds. They've seen the strongest start to this year,
and this is calculated as anything over 1.2 million.
Yeah,
so that was
considered
to be higher end.
We've seen new sellers up there 18%, and new sales agreed for those properties at 20%. So again, there is a big demand for those higher end properties, and people are moving.
Yeah, absolutely. I mean, we've certainly seen that with our properties over $1 million, and we've and that was all in July. We sold Half Acre, Vale Bank, they were all in July. So, there seems to be a good level of energy in that area in the market.
So, Alistair, talk to us a little bit about the mortgage rates. I know you keep always a close eye on
Yes, so mortgage rates, obviously we had, at the start of August, there was the drop in the base rate, and everyone was like, oh, brilliant, I'm going to buy a house now. Well, mortgage rates are based on what's called the swap rate, which is the long-term sort of projection for where interest rates are going to be. So the drop in the base rate had already been anticipated and already been baked into quite a lot of the interest rates. So the rates at the moment are actually incredible. There's a very, very competitive market out there because a lot of the lenders haven't hit their quotas, so they're still jostling for business. So if you've got a 40% deposit, so this is generally second movers who have built up some equity, but if you've got a 40% deposit, you can get a rate starting at 3.84%. So that's the lowest one available at the moment. Likewise though, for buy-to-let mortgage, because there's so few people doing buy-to-let because the government made it so unappealing to do it, they're really competitive. That's 3.84 as well, which is amazing. Really. So obviously first time buyer, 90% mortgage, 10% deposit. That's your kind of traditional first stepper move. The best rates out there at the moment are about 4.68 because they're classified as slightly higher risk with a lower deposit. But still 4.68 is down at least a whole % on where it was this time last year. So that's again positive,
positive.
For the market.
Yeah.
The rates are again projected to go down in September. However, that again has already been baked into the current mortgage rates because of the swap rate situation. So don't kind of keep putting it off. Oh well, the rate might come down. The rate might come down. Well, we've just seen that the indicators are that house prices are going to go up. So if you're waiting to save 50 quid a month on your mortgage, you're better off buying a house because otherwise, if you wait until next year, the house price is going to be 5 or 6 grand more. So it seems more logical.
It's something that I say to a lot of people is if everyone's waiting for the mortgage rates to come down, and there is a million people in your position, for example, that are waiting for the rates to come down, and they all come to the same assumption that the rates are now at the lowest they're going to be, that's a million more buyers that come to the market all at the same time, all looking for a similar style of property. Your competition wildly increases for a property, and that competition only drives up house prices. So, pounce on it when the time is right. If you see the right house.
I've just offered on a house, actually, for that exact reason. Summer activity. We wanted to just have a little bit on that because we've bucked the trend, or the market has bucked the trend. Normally we would expect to see a slowdown when you have a big sporting event like the Euros. You'd expect to see a slowdown when you have an election, whilst people wait and see what's going to happen. And then of course we've had the Olympics, which traditionally would impact the market slightly. All three have happened in the last 2 months, and none of them have impacted the market at all, which is incredible.
Yeah, we've had a little bit of a slowdown sort of early August with the school holidays, so again that's the higher end of the market. Those family homes may have suffered a little bit, but overall, no. Just before the election there wasn't really much of a downturn. Straight after the election everything just carried on as has been going. So it's quite, it's encouraging that, I think as Mayor said, that all the indicators are leading up to a very positive autumn in this market.
And I want to give some balance. I want there to be some bad news, but I can't. I genuinely.
There's not a lot out there in terms of bad news.
Exactly. So the only thing I'd say is that buyers do remain cautious. The challenges of last year are still in people's minds, and so pricing. You have, as a seller, it's about pricing to entice. There's no, oh well, let's go. We can always come down. We can't go up. Let's go for a high price. Buyers are just not interested. They are very aware of what other properties are selling for, and they're very nervous. And therefore, pricing to entice is key. We need to make sure that your pricing strategy is competitive. So that's the only thing I'd advise in terms of trying to give some sort of negative or balance.
Yeah.
But
so don't get too carried away by the news that house prices are increasing.
Yeah, we're far from a hedonistic market. We're in a 6 or 7 out of 10 market, not an 8 or 9 out of 10 market. So,
I'd agree.
Yeah. Good.
Okay, lovely.
As usual, any questions or comments, please just jot them below. We'd be happy to help and answer anything you've got.
Yeah.
And that's it from me.
Thank you very much. Thanks for watching.